Hi guys, it's Cousin Marv Eisen. Let's do a chart reading session for July 8th and see where the best trade entries are. Now, before we start this session, I just want to point out that what we always want to do, is to find the entry with the lowest possible risk. If it makes money, great, but we certainly don't want to lose money. So we want to find the trades with the best possible low risk, high probability potential. Okay, so the morning of July 8th, here we are at 9:30. Now, of course, you're not just going to sit down at 9:30. You're probably going to be at your computer maybe a half an hour before, or even before that, listening to the morning news, CNBC, or whatever it is that you get your news from. And you sit down at your computer, and let's say it's 9:15, okay? And you look at your chart. This is a 3-minute chart of the S&P ESU 19, and which is the September contract. Remember that September expiration. And we're sitting at our screen at 9:15, and here we are. We're not doing anything. And then we see market comes down 3 points, and a series of short candles with the stochastics bottoming out just about at 9:30, okay? So we wait, and look what happens after 9:30. Let's go to the 9:33 candle, okay? The stochastics is bottom. 9:36 candle, stochastics is bottom. 9:39 candle, stochastics is bottom. 9:42 candle, stochastics is bottom, and look where the prices are at 29.76. And for this 10 minutes at 29.76, it's pretty well established that the prices have established a bottom here at 29.76. With the stochastics at an oversold level, wouldn't it be a good place to take a trade? And yes, it would. And let's say you took the trade at 29.76 and a quarter, 29.76 and a half, somewhere around here. By the way, there's 1 point between each horizontal line on each chart, and as you know, in the S&P E-mini, each point is worth $50. So let's say you took a trade here at 29.7650, and for the next 1, 2, 3, 4, 5, 6, 7, 8 candles, 9 candles, that's 3 minutes a candle, it's almost a half an hour. For the next half hour, you watched your profits grow. Now, let's say you get into the trade, which is the most harrowing part when you get into a trade, because you really have a sentiment of the market going in the direction that your trade is in. So you figure the market's going to go up, and when you hop on at 29.76 and a quarter or 29.76 and a half, the market basically goes up, comes down a little bit, not much. It settles at 29.77 for 9 minutes. And then at 10:03, at 10 o'clock rather, 10 o'clock, we shoot up a point and a half. And then at the 10:03 candle, another point and a half. 10:04 candle, 10:09 candle rather, we back off, but just a tiny little bit. And this isn't enough to shake you off, is it? If you took my course, Trading Mastery for Financial Freedom, you know that price sentiment is based on the trades that other traders are making. And as you can see here, the market has come up now 1, 2, 3, 4, 5 points, and it backed off only maybe a half a point. So you're not going to leave your trade here. And then you'll stay on at 10:12 for another 2 points. And then at 10:13, 10:15, you'll stay on this trade, and maybe it'll back off a little bit. But look what happens. It forms, that's almost a shooting star. That's more a shooting star, I'd say, than a reverse hammer, except that a shooting star, the next candle would gap down. But nevertheless, it's a shooting star showing strength from the sellers. So that would be an indication that I made my money. This is the place to hop off. Okay, and notice also the stochastics is at an overbought level. So stochastics is overbought, and you've made 1, 2, 3, 4, 5, 6, 7, maybe 8.5 points. Wow, 8.5 points in about a half an hour at $50 a point. That's over $400 on a trade where the stochastics were at a oversold level. A bottom had been established, price bottom had been established, temporary price bottom, but a bottom nonetheless. So it was a low risk trade, and you got on, and immediately the prices went in your favor, backed off a little bit, but then came up, so you made out very well. But look what happens if you're a good trader. You know that the prices are overbought over here at 10, 12, and you hop off your trade because you see this shooting star, and then you say, wait a minute, the shooting star and the stochastics are at an overbought level. Maybe I should take a trade to the downside. And if you did, look how smart you were. You rode it all the way down for another 9, maybe 10 points. 1, 2, 3, 4, 5, 6, 7, 8. 8 points, another $400. So in the first hour of trading, and this is 10:30 where I have my cursor right here. In the first hour of trading, you were good for about $800 if you know how to read candles and you took my course and you listened and you practiced and you recognized the signals. This was a signal, the temporary bottom established. This was a signal, the oversold stochastics. This was a signal, the shooting star. This was a signal, the overbought stochastics. And man, all you have to do is listen to what the market is telling you. Anyway, that was the trade for the day. Marv Eisen from Timeless Dollar. Let's look at the rest of the day. Actually, if you made $800 or even if you made $400, you should be a happy camper and go about the rest of the day away from your computer. And if you made $800, you're a very happy person. And don't press your luck, because the rest of the day the market trades up and down, up and down, up and down, seesaw, and really there's nothing to trade here. Sure, there's a hammer here at a little after 2 p.m., which you could have jumped on here, but the short swings, yeah, you could have made some money here. I wouldn't recommend it because right here we're at the end of the day. Where are we at the end of the day? At 1600. So the market only went maybe up 3 points, and the risk. Look at the risk here. This is not a trading market. This is not a safe market. This is not the market that I've taught you how to trade. And anyway, this morning trade, this is all you needed. So that's the chart reading lesson for July 8th. Thanks for watching, and I'll see you in my next video.